Good day, everyone. All right, let me get this link shared out and we'll dive into it. I hope you're all doing well. All right, just sharing out the link here and we'll get going. Okay, well, Bitcoin clearly in a range. So basically I'm going to review order flow. Just noting now, this point of control, it's pretty widely distributed here, but it's been holding at support. It was support for these lows, which was the long I took. It was up until this low. It was point of control. It's developed up higher, but we've came and retested it. It's also kind of the middle of this range, if you want to view this as a range. And I was noting yesterday in a members live stream that, let's go to XO here, that although we had some bearish market structure before this rally, order flow is quite bullish here locally coming out of this rally. We just see heavy selling, even an increase in open interest, shorts accumulating. So it's not so surprising to see a move up to the highs of the range. And as we were getting this impulse, I was interested in taking a short at a sweep of these highs. But I'm actually going to pop to a lower time frame here in a second. But there was a ton of longs that opened up at the highs of this move. It's going to be easier to see on the 5-minute. So order flow, I think it's still kind of on a higher time frame in this range, bullish. But up here, have gotten wrecked locally, which did happen. And I think just based on order flow, shorting at the top of the range there certainly made sense. See a lot of longs opening here as well, 9.7 million positive delta on an increase in open interest. And tons of volume coming in here. Lots of longs getting stopped out. And now we're kind of ranging under the highs of the range. And it'll be interesting to see what happens here in the New York Open. Maybe some scalp ideas. But let's look at the charts and look at our kind of local technical levels here. So obviously, we just have our local range idea here, which is come in, probably take these impulse lows. These could be scalp ideas. Get a big flush in delta there. High volume, reclaim the level, trading it back up into the local highs even as a scalp here. That'd be something I'd be interested in depending on what order flow looks like. And if we break this down, well, then just coming and taking these lows would be interesting. Now, something that probably many of you have noticed is we've just been putting in consecutively higher lows, not just in this range, but all the way up here, even on the lower time frames. Since this impulse, I mean technically since this one, we have not swept an established low. We double bottomed a low here, higher lows, higher lows, higher lows, higher lows. Arguably you could call this a sweep, but even all the way up here, all these little pullbacks, higher lows. We had our initial wick, rejection, higher low, higher low, higher low. So what that means, and even in here, equal lows, this was a very minor sweep, but what that means is with all these higher lows, higher low, there's probably a ton of liquidity building up under these lows. People will have been moving their stops up. And so if we do come and test these lows, although there might be some nice triggers for longs, if we sweep and reclaim and order flow looks compelling, it wouldn't be surprising to see a big wipe of all this liquidity as stop losses and liquidations just trigger into one another. That's a theory, but you know, we don't know until price gets there, but I could imagine why there might be a lot of liquidity under all these lows. So that's something to consider if we start taking these lower lows, or sorry, higher lows. And a level I'd really be interested in would be, I'm sure a lot of people are looking at it or were, but have probably gotten bored of looking at it. It's coming and retesting this high. There's some fib levels here. And if we go on to a lower time frame, it'd be sweeping the wick of this initial rejection. So the trigger for me, and this would be something I'd be willing to trade up through the highs of the range as a potential continuation long. The bear, we'll talk about the bearish outcomes shortly, but the trigger for me would be to come down, you know, whether we range here. We could obviously break out. This is just if we do break all these lows, take that wick and have a nice tight invalidation long set up here. You know, it seems more and more unlikely as price just continues to hold these higher lows, but it's always something that you want to be prepared for. And so I think that's a pretty clean idea. There's also a 382 fib here that I don't have on the chart. So I'd be interested in that setup. Probably could get something like 10R out of it, 13R. And maybe you would look to either hedge short at key resistance on retracements. But yeah, that would be the most compelling long setup if we can wipe out all this liquidity. But of course, there are local long setups, such as, I actually like to draw this, in this case, from the daily candle low here. But coming down into a key fib and taking these equal lows would be a nice idea as well. But it really just depends how price reacts there. I prefer to use market orders. Of course, you can use limit orders, you know, set some reasonable invalidation. But anyways, as far as Bitcoin goes for longs, scalping this local structure would be maybe interesting and something that wouldn't be surprising to happen today with tight invalidation. If it doesn't work, take a stop. I still do have swing shorts from the range highs just because I'm willing to hold a short if we aren't breaking out. And then below that, these are interesting levels. It's just hard to imagine that if we take these lows, the first time we will have taken some established lows in really weeks, that we aren't just going to run some of these deeper lows. So anyways, I'm going to be watching both levels. When you're watching order flow, watching a reaction, for example, we had a massive dump in volume here. There's about 60 million volume in a 5-minute candle. maybe 18 million negative delta, and we front ran this low. And that was, there was an idea of trading a sweep of this low, but this ended up holding as a major low. And that was as ETH was sweeping this low. So at the time, I took this ETH long, and we'll talk about ETH too. And I did say that, in the Discord, there was a lot of volume and delta in this Bitcoin wick, but because I had this ETH setup planned, and the structure was much cleaner, which is just it's basically the same structure I'm looking at for Bitcoin, sweeping the major low. And we were wick through this low. I'd rather just take this tighter invalidation, very clear setup on Bitcoin or on ETH than Bitcoin. As far as ETH goes, we are at a major golden pocket. It's just a major fib level pulled from this high to this low on the daily chart. A little bit of structure here. There's a weekly candle high here that I think would be interesting to run, but we'd have to break out of this resistance. Local setups. I'd be interested if we could come and take these lows here for a long setup. There's a little bit of confluence there. I did want to take some time to do a little bit of educational content on structuring trades. I was doing some posts on the Discord, and I thought, I may as well briefly cover this in the live stream. And so that is on Algo. So Algo running into some, just a major fib level here. This high to this low. It ran through it quite a bit, the 786 here. The idea is sweeping this high, rejecting. We did get that big initial rejection, but there's also a wick here that we might have swept. But anyways, somebody was asking me in the live stream yesterday, the members live stream, here on the chart, how I would look to get into an algo short after this initial rejection, which ran down about 8%. And I said I would be looking to see price sweep the impulse low here, which is a likely place to get a reaction and a retracement from. And it's a simple concept. Where do people put their liquidations and stop losses on a move like this? Under this structure. It's just on all time frames. It's very obvious structure. So price coming in, running those stops, running that liquidity is a nice idea. And then coming up and rallying and taking some of this structure into the 786, which we have tapped. So anyways, that was my idea for coming up and shorting a sweep of this structure. And I did a little series of posts in the Discord about how you might structure those trades. So I'm going to cover that really quickly because I think there's a lot of value there. And then, probably by the time I'm done, we'll be right around the New York Open. And this is a live trading session for me. So the primary focus of this live stream is just going to be me giving my thoughts, possibly taking some positions during the live stream. I like to trade around the New York Open. The last couple haven't been too exciting, but we'll see what happens today. But anyways, let's dive into this really quickly. So go over to the Discord. I gave an update today as we were approaching taking these highs. That yesterday somebody had asked me, this is just a screenshot from the live stream, how would I structure or look to trade short on algo? I said I wouldn't really be so interested in shorting after this big rejection, although this was very bearish market structure. You have this kind of grinding lower highs, and typically those end in an impulse. But to get into a swing short, I would be more interested in seeing this pivot low taken, which I just showed you was taken, and a rally up through this high into the 786. So that's how I'd be looking to trade that. And so here I'm just giving an example of what that trade could look like. We could reject here. We could form a local range here. If we break these equal lows where we've bounced from, there's not a lot of structure here. It wouldn't be surprising just to see price run through all these lows into this target. Now, it would still be a valid idea to short anything up in here and even a sweep of this high into this other established high. That's on a higher time frame. And so how might you structure a short within this price action and these possibilities? And invalidation, of course, just being a break and claim of that level. And so I gave a couple examples. The first example I gave is, well, you might think, okay, well, there's some probability that we just reject at this local technical retracement. But then we could still come back and sweep the high. So maybe I want to look to trade this twice. I'm looking for a wider setup with a stop above this high as my invalidation, and a tighter setup if we do sweep the high, I get stopped out and I reject. So one's maybe like a 7.5R setup, one's a 20R. And that just means for every dollar you risk, you make $7.5 if you hold it to the target. Or in the 20R case, for every dollar you risk, you make $20. And so, you know, that's, I'm sure most of you understand the idea of risk reward. So I won't go too deep into that. But anyways, so that's one example. Another example is you just trade it wide. You try to account for a sweep in your setup, trade it as a 4R setup. And why you might want to trade it like that, well, maybe you're going to work and you're going to be off the charts for 8 hours, or you're going to sleep then to work and you're going to be off the chart for 15 hours. And you won't have a chance to re-enter if there is a sweep. And it can make sense to trade it as a wide 4R setup, but it's not necessarily taking advantage of the most probable outcomes here. And the next idea is a very kind of aggressive tight setup where you're looking to trade very tightly around the level. This would be something like a 17R setup. And if price breaks out and sweeps here, you trade that as a separate setup. But you're always thinking about the possibility that there's several setups here that I would like to short. How do I short this setup, but still am okay shorting a sweep of the highs if we get that, or just not shorting at all if there's a breakout. But a case like this, you can find yourself in no man's land where price runs your stop, doesn't give you a second setup, and then rejects. And so you can start thinking, well, maybe I'm going to trade the first setup with half risk. And so let's say you typically risk 2% on a trade. You're going to risk 1%. And if price runs your stop and then rejects, you just take the same setup with another 1% risk, and then you turn it into a 1-hour trade, because that is a possibility that price just runs that level again and rejects, in which case you still want to be short. Maybe on the second short, you just trade it wider. But you're really trying to think about, for one, am I going to be around to trade a second setup as a tight setup, or am I going to sleep? And so I give the example, you know, if I'm about to go to sleep, it doesn't make sense for me to say, I'm going to short algo here. Let me go back to the chart here. I'm going to short algo here with a stop right above the highs. I'm looking for this setup. And if I get stopped out, I'm just going to re-enter. But then I go to sleep, and then this happens. Or I'm going to re-enter at a sweep of the highs, and I go to sleep, and this happens. Because it's not even a physical possibility that I'm going to be able to do that. So if I'm about to go to sleep, it might make sense to run that as a wider setup. But anyways, just thinking about that. Invalidation is not just about reducing your chance of taking a stop loss. And the final example I gave is if I just wanted to, I said, damn it, I've come this far, so I'm going to do one more post. This is stuff I cover in the educational materials in the Discord, but sometimes I like to use live chart examples and give those types of updates. But anyways, if I just want to avoid taking a stop, well, why not just run a 20% stop, trade it really small as a 1-hour setup? And the reason I wouldn't do that is because I don't feel that's taking advantage of the most probable scenarios here. And probably the 3 most probable scenarios is rejecting from this local technical target, a sweep of a local high into a local fib. It's a nice technical idea for a retracement after a rejection and then continuation, or sweeping the major high, or just breaking out. So if these are, and this is a little simplified, but if these are the three most likely scenarios in my mind, why would I trade a stop 20% away just to avoid being stopped out and get a 1R setup out of something that, even if I trade it twice and it works, if structured properly, I probably can make 15R out of it. And so you're always trying to balance your invalidation around reasonable ideas. And I think trading this very tight, although it is reasonable, it is more advanced, because you also have to ask yourself, are you disciplined enough to cut your position and then price starts chopping around here and wait for a valid trigger and a new setup to trade? Or are you going to keep shorting with a 0.4% stop loss and get stopped out 20 times while price just does nothing? So that, I would say it's more advanced to look at trading these as tighter setups. But I'm always looking to give more value than just saying entry X, stop loss X, target X. And although I often share my setup with my invalidation, that's not always the answer for everyone, right? How I might trade a setup and might be considering trading it twice or 3 times, depending on how price action plays out, might not work for everyone, because I often have more time available on the charts. And the reason you might trade it twice, well, the math is pretty simple here. Let's say you trade it like this. You have a 17R setup into, let's say, a 20R setup. One loses, so you lose $1, and the second one wins, and you make $22. So you're up $21 for every dollar you risked. And on the wide setup, it works and you make $4. You didn't take a stop loss. The same price action happened. But did you really maximize the risk reward of a setup like this? So anyways, that's probably it for the little educational detour here. And we can get back into the charts. So yeah, today let's just look at how the open comes in. There's a little mini range here on Bitcoin. And see if there's any logical trade setups. Just a reminder, this is not financial advice. I'm talking about the reasons I enter trades, how I invalidate them. And yeah, I think if you're not an experienced trader, you shouldn't be doing anything other than paper trading, which is trading with fake money. And we do have an awesome paper trading platform that is free to use. So give that a try. Collect your own data, collect your statistics, and when you're confident and comfortable that you're trading EV positive, maybe it's time to move into trading a small amount of live funds. If that goes well, you can increase your size a little bit. But I never like to risk, the standard is between 1 and 2%. It can be less than 1 of your trading account per trade. And I won't go into all of that because I cover it so often, and it's easy to detour every live stream into a risk management session. But it's very important. There's no trading system that is going to hold up against poor risk management. If you're risking 20, 30% of your account on every trade, you're just going to blow up. So we do have a little bit of local bearishness forming here in order flow. So it's a little more bullish on a higher time frame, but it should be noted that on a lower time frame, we're seeing longs opening here, increase in open interest, longs, but price isn't making new highs, and CVD is. And so to put that in a different term, we can see here some shorts closing out, decrease in open interest, 3.9 million positive delta. Longs opening here, 4.4 million positive delta on this 5-minute candle. And so from this high, there's more market longs opening, but price isn't in relation to this high, but price is kind of failing to break out here. So that does mean that there's limit sell orders sitting up here, selling into all of this buying pressure. So locally, we're kind of coming into the New York Open with a probably more of a local bearish perspective on order flow. It's nothing extreme. It's just there's selling pressure coming in to all of these local rallies. But on the higher time frame in the range, you could still consider this bullish as price is breaking up and retesting the range highs. But we've all seen it before. What can easily happen is, I'll go over to the trading view chart for this example. Although the context here can be bullish, we can just wipe out liquidity and then rally. We've seen this happen already in this range many times, and if you ever look at the Bitcoin chart, you see that sort of thing happen all the time. So it's always good to pay attention to the local order flow to give some structure. And there's probably some ideas here for scalp shorts. Be nice to have a shorter wick above this high. But taking these maybe seems a little more likely. Even this is a 2-hour setup. Could maybe TP there, and if there's just no strength, look to run it down. We'll see what order flow looks like. I might be interested in scalping a short on a sweep of these highs into the New York Open, which comes in about 20 minutes. But there's also the idea that we're not even going to take this high because we're seeing a pretty decent run on it right now with longs opening. And so far, price is struggling. But no sense in guessing. The plan here would just be to structure trades technically. So I think a failed break of these highs could be an interesting trigger. Even waiting for something like this. Validation above the new high. It's 2R down to there. And if there's just no strength and price just runs these levels, coming and sweeping this impulse low, this could be a valid target. Be very similar to the algo idea, right? Just this is where there's going to be a lot of local liquidity under these lows. Back into the point of control, the middle of the channel. Come retest this wick. I'd be very interested to see what order flow looks like if we can take one of these established lows, like I said earlier. So and when I said similar to the algo idea, I just mean this. You know, this is a different kind of time frame here. But you have the impulse, and then you come and retrace into the impulse origin. Very possible we just break out though. Hey everyone, just Scanning through chat here. A lot of longs opening. So we can take a look at that really quick. A lot in terms of local price action. Another 4.1 million positive delta, 3 million longs here. We know they're longs opening and not shorts closing because of the increase in open interest. I mean, if these longs keep opening here, and we can't break out of these local highs, or we just sweep and reject them, it's not hard to imagine a local bearish outcome here. Be very interesting to take the liquidity above these local highs, see a rejection. That could be an interesting scalp short. In which case I'd put on a little bit of risk. If I get stopped out, that's okay. But the ideal scenario from an order flow perspective would be to see price run that high. And I'll even just mark it out here. Although right now, it wouldn't be so surprising to see it front run. But we have 15 minutes to the New York Open. But anyways, seeing this and seeing a big increase in volume and positive delta, some shorts getting stopped out, some more longs opening, and then price reject back below those highs. Tapping that liquidity, trapping some liquidity, then just running through the lows. So that would be how I'd look to scalp this. And if there's just a straight breakout, then I wouldn't take the trade. But we're seeing absorption already. And absorption doesn't mean that price has to go down. It's just saying, hey, there's a lot of longs opening here. And price is struggling. And the only way that happens is if there's limit selling orders sitting here absorbing that market buying pressure. I guess there's Powell's about to speak. Those events can be a cause for volatility, but I never factor in personally the outcome of those types of speeches for my trades. I just look to trade technical levels. A lot of times it can just end up being that technical targets come very quickly. We can talk about some breakout ideas here because it's very possible that we just break out into the open here. Just claim this range, run the highs. Obviously the most extreme target is coming and taking this high up here. Sometimes like to play around with the idea of projecting fibs and thinking about what it would look like to have our 618 here. I call them predictive fibs under this weekly candle low. That would run us up to about 27K or 37K. So I might be willing to take a short if there's a really sharp impulse like this, tons of longs opening, and then price starts wicking down. I might be willing to take a tight invalidation short on an impulse. That's a very tricky trade. Oh, wrong chart. It's a very tricky trade to take, and I'd probably trade it small and just take a stab at that initial wick. should be noted, there's a couple things here on a higher time frame that I'll review very quickly. The reason that I would consider, wow, I have too much stuff on my chart here. Here, let's just, I don't even know what this is, but let's just throw it into a group, get rid of it all. Yeah, it'll be clear enough. So this is a major 618 from this pivot high to here. And we have this ascending structure that's still holding as resistance. So you could say that this is high time frame structural resistance. And it can make sense to look for swing shorts here just based on structure. Order flow doesn't look particularly bearish, but yeah, I mean, there's, until we break this high time frame structure, it's really hard to say what's more likely here. Even if we sweep down here, you know, signs of weakness would be flipping these levels into resistance. And I'm not going to spend a lot of time talking about it, but if we do break this down, I talked about this long, I'd be interested in retesting this high. If we break this down, well, there's no structure here, and I would just look to come and sweep this weekly candle low. And maybe that's a key fib depending on where we reject from. And I'll just show that on the weekly chart really quick. This is just our weekly low. And so coming down and looking for a long and a sweep of that, that's around 29,000. And so a big, you know, although you might have a bias or you might have reasons for thinking price is going to go higher or lower, it's always good to have a plan for if price comes here and we get a reaction, I'd be interested in a long with clear invalidation. And if we break that down, well, my plan would be to come and look to sweep these weekly candle lows. It doesn't mean we will do it, but if we do, I'll be prepared. Also have like an ascending structure here where, you know, coming up and taking this trend line for a third touch could be interesting. You'll find that often with like 3 moves through the highs, 1, 2, 3, and reject on the third, and it forming a nice trend line interaction. But the trigger for that would just be a rejection back under this high for me. You'll find it at the lows as well, 3 consecutive lows. But more interested in local PA here. Although I do want to, I'll just redraw this ray. I can't get this to snap. Snapping to that wick. I have some Elliott wave counts that I'm looking at, but it's just, this is such a key region. Like, one would imagine that at some point in the nearish future, this range is going to resolve. I can take longs in this range and take shorts in this range, Elliott wave ideas aside, but depending on what happens here, it's going to be very determinant on what's more or less likely, whether we break up or break down. Someone's asking, how do I join your closed Discord group? There should be a link in the info section of this. There's a link on my Twitter bio. There's also instructions in the public Discord. But it's a website, luckyapestradingfloor.com. You should see the link there. And you can sign up for the Discord. You can pay via PayPal or crypto. But just it's all automated, so there's instructions. Once you sign up, you join the Discord, you go into the members area and you click link Discord, and it will automatically upgrade your account to a member's account. So you don't need to message me or anyone when you sign up. And a question I get a lot is, can you sign up on any day of the month? I'm assuming there's Discords where you can only join on like maybe the beginning of the month or something, but you can just join anytime. And if you do have any questions, there's a help channel in the Discord and you can ask, and we'll get you sorted out. So just want to point out an order flow here. This is just the 5-minute chart. For those of you who don't know what we're looking at, I'll give a brief explanation. These are the candles. You see this blue, this is a red candle, but on my chart, blue. This is a white candle or a green candle. Beside the candles here, this is a bid-ask profile. And this is showing your market selling and your market buying. It doesn't show limit orders, but you can infer limit orders because that's how things work. And so this is market long, 3.1 million. And so what's happening here is people are longing into this, the highs of this local range, but price is not going up. And these are significant longs. Like typically, if you see $3, $4, $5 million in longs opening, it's not very common that you don't see price move at all, unless there's a big trader sitting there limit selling into it. And so when you see this weakness here after these longs open, the idea is that, well, these longs are going to start getting forced to close. And so you could call it like a battle between these aggressive long positions and these limit sellers. The limit sellers obviously want price to go down because they're selling. If they wanted it to go up, they would probably be buying or holding. And obviously these market longs want price to go up. But what happens, and many of you should be able to answer this question based on your own experience, when you open a long at the top of a range for a breakout and then price starts going down and you start getting put underwater, and maybe you've set your stops under this local low, or maybe you're just watching for weakness. Well, as price goes down, that puts pressure on these longs, and so all of a sudden this $3 million long becomes selling pressure, and these longs become selling pressure. You start to see that reflected in order flow, and then you see market selling, and that can drive price down. And so they become liquidity, and maybe their stops are much wider, but they become liquidity for these guys limit selling. But these limit sellers can also become liquidity for, if they're opening short positions for a breakout. So, but you can get some gauge of the size of the traders based on how much volume's coming in. And so I think there's some examples here that can make this a little more clear. So, my update in the Discord yesterday, I'm just gonna do this because just say it's not hindsight, it's just, this is the concept. So as we were pushing up to the range last night, I was looking for a sweep for a short. I said lots of breakout longs opening here. So this is at the highs of the range. We see 8.5 million positive delta, 2.4 million. You see them on the bid-ask profile here. And price stops moving. Could give us a rejection as they get put underwater. Shorts still have an easy invalidation, which is just right above the range highs. But, this was today. But obviously, we got that rejection. But we can actually see that playing out in order flow. You can see these longs opening and opening here, but then as this candle comes down, we see a bunch of these positions closing, because these guys are all looking for a breakout, but as price starts coming down, now you see this big decrease in open interest, as all these longs start closing out, stopping out. They all get stopped out. Price starts rallying again on this next 5-minute candle. And what do you see? You see 9.7 million longs come in. Just longs, all opening right back up. Probably the idea here would be all these guys that just got stopped out, get stopped out, but it's very emotional. You can see this emotion in the order flow. People are looking at this breakout, price is going to 50K, big long positions opening. They all get stopped out, but then price starts going up again and they think, oh, I just got stopped out, I gotta open my long. These are some big traders to be that emotional, but definitely happens. So they all open up their long positions again. Price really does nothing for 9.7 million delta. We range and then we flush out all those longs again. You see the increase in open interest, 9.7 million delta, boom, the lows get taken, they all get stopped out again. 10.6 million negative delta to the positive, or in relation to the positive. So you can guess that these positions, a lot of them are these positions closing out, big decrease in open interest. And then things kind of start settling down a little bit up until now. We have some decent delta candles, but nothing crazy up until now. Now we're starting to see some more aggressive longs starting to open again. Price isn't breaking down yet. It'll be interesting to see when these highs get taken. But of course, price can break out, and it does break out, and we all understand that, and it breaks down. You can have super high negative delta get absorbed, and price can still break down. And that's why you want to structure your trades with invalidation. I'm just going to read chat for a second. I'm not sure about this question. Somebody's, well, first I appreciate, all of you saying great video, that you appreciate my time, and that you're glad to be here. I appreciate you guys being here too. These streams can be fun. I'm not sure what you mean by, someone asked, how do you put the values of each candle on exo charts? I'm not sure exactly what you're asking. I'm not sure if you're asking tick size or what, but if you could re-ask that question. CB, a long-term member, says, I wish I had started out with the LATF group. I learned it wrong myself. Like a baseball swing when trying to golf, it's hard to unlearn. Yeah, I think especially for just a brand new trader, but really anyone at any stage, it's like to start your journey with no concept of even how to structure a trade, risk management, thinking about probabilities, like why, for example, if there's something that I wouldn't say is unlikely to happen here in the New York Open, although it's getting more unlikely as this gets absorbed. If we see this move up through the highs, big positive delta, and we reject, I'll probably take that scalp, and even if it doesn't work and I get stopped out, it's not a big deal. I take a stop loss. I don't consider that a bad trade or a bad decision, because I understand there's no way to know what will happen with certainty. All it takes is, let's just say there's 15 million positive delta up here. That'd be very high. We reject, those longs get put underwater. I take the short, and then 40 million market longs open. I get stopped out. I can't stop that. I have no way of knowing what other traders are going to do or aren't going to do, but I can weigh the balance of probabilities. I can structure a trade with invalidation and risk management. I marked this on the other chart, but taking these highs would also be interesting. Sorry, I'm not sure how to pronounce your first name. I'm going to call you Pedro Silva. It said volume total and volume for each bar. When you zoom in, you see the numbers. Where do I turn that on? Um, I'm ass- I'm assuming maybe you mean this. This is footprint statistics up here. I also have some templates shared in the Discord that you could upload into your XO if you wish. Yeah, and there's different templates. This is just a daily chart looking at the volume profiles in each daily candle. Have our value area low under all these equal lows on the daily here. So that, this is just an interesting idea if we can come and take these lows. But again, I'd be very curious to see if they hold up or if all this liquidity just gets wiped out. And the reason why when you have a bunch of equal lows, or sorry, higher lows stacked up, why price can just run through them all, if they haven't been tapped in a long time, you have all these traders, not all of them. I mean, clearly many have stopped themselves out even up here, right? But you have a lot of liquidity building over time. And what happens if you have tons of traders who have long positions that have been holding for weeks, all with their stop losses at the same point? Well, as soon as this liquidity gets taken, all of those stop losses trigger at once. And that's why, sometimes your stop loss doesn't trigger. It's just pure selling pressure. There's no buying pressure coming in. And maybe there's some limit longs, but there's so much market selling, it just blows through everything. And you get those big liquidity runs as stop losses pile into one another. And it's just all forced selling all at the same time. You said you mean on the chart, not on XO. I mean, yeah, there's an argument for just shorting here with the stop above the range highs as well. I already have a short, so I don't know if I'm so interested in taking that. But we're seeing price grinding down. Of course, that would be primarily a scalp. So let me answer your question in a second on the trading view here. But I just want to go here. I mean, taking this short is not a crazy idea. You have really tight invalidation. I mean, really, you'd be taking it here at this point. Just because you're seeing all this absorption. But what can happen is all of a sudden we could see this, and we could see just all these longs stopped out, a nice reaction, and then we run up this level. So it's not even necessarily whether or not you're likely to get some kind of rejection here. It's just where's it likely to end. And order flow is going to tell that story a little bit. Because you could even just call this wick a sweep, like a sweep of these highs. This is a retest. But we're seeing a lot of absorption here, so locally. But if we look at XO here, so like if you're scalping this, be interesting to see what happens as we take just these local lows, because you can actually get a really nice reaction. Basically, there's a few concepts here, but so imagine you're in a long position here, you want to trade for a breakout. Maybe we'd look at all these longs that have been opening up here. Price runs these local lows, people are running tight stops. They all get stopped out, that liquidity gets grabbed, limit longs fill here, and then price runs up. Well, what are these people likely to do as they see price start running up again? All these long positions are likely to pile back in all at the same time. Not likely maybe, but it's an understandable concept. Because think about what you would do. If you wanted to trade a breakout here, you get wicked out, and then price starts running back up aggressively again, you might just market long back into the position, but now multiply that by all these longs that have been accumulating. And that's why you can get a really nice reaction off a sweep, is all those people are stopped out at once, and then as price starts coming up, they all start piling back in at once. So anyways, that's something to pay attention to when scalping. But maybe price starts taking these lows. There's really no signs of a bunch of longs getting stopped out, you don't have those big high negative delta candles, don't have high volume, and you could infer from that that the liquidity is lower. Maybe you start looking at these lows, see what the reaction's like, these lows, and maybe into these lows where I'd be interested in taking a scalp long. Oh, why did I read that wrong? I thought it said, yeah, it's the bid-ask profile. So to turn on this for each bar, you go here, you turn on bid-ask, because you can go like volume cluster, delta cluster, volume profile. Like this would be a volume profile. So it's just showing you how much volume at each tick. Bid-ask, and then here, text type, go to bid-ask. All right, so here we're seeing what I kind of said would happen. Not would happen, but we're seeing signs that these longs that are opening, they get absorbed, and now price is coming down, and we're seeing this big decrease in delta here, 3.8 million so far, and a 4.5 million candle. So 5 million candle, 4.2 million negative delta. So the vast majority of this is just positions closing. And we know their positions closing because it's on a decrease in open interest. That's here. Decrease in open interest, increase. I think somebody just asked, how do you know if a long/short is big or not? You compare that to long or short in the past. Yeah, I mean, well, 6, 7, 8 million in a tick that's a big long position. Like for a $3 million long position to open here, that's a big long position, and for there not to be any follow through, we know that for that position to be marketed into, somebody took the other side of that. And typically bigger traders, so just, I'm gonna continue with this. So say you're scalping this short and you're looking for a breakdown here. You'd be wary about holding that if we can't continue breaking down here. We've swept these local lows, 4.3 million, because what's going to happen if we can't break these local lows and we see some strength, we'll probably start to see these same long positions open back up, and that can just push price right back into the highs of the range. But we'll see if we get continuation here. And I know this is probably very confusing for people that don't know anything about order flow, but hopefully it's understandable enough that you're gaining some value out of the concepts. We can see the structure. Most of the positions came out here, but this horizontal structure is not too complicated as a liquidity target. I would like to see more liquidity run out of here, because 4.3 million, it's not insignificant, and we should note that most of those closed here. It's not insignificant in a single candle, but it's not very significant in terms of the CVD we've seen here. For example, in this range, we've seen an increase of about 25 million delta from, actually, yeah, from here, it's been about 21 million. So we know there's still a lot of longs here because we've had a big increase in open interest. Another way to look at this would be to just see all this open interest flushed that's accumulated in this range. But even up till here, you would really want to see more like 15 to 20 million negative delta for a better indication that the majority of these longs have been stopped out. Maybe even 12. And just to point out, I know how much delta has accumulated here when I'm looking at the CVDs here. It's gone from like negative 5 million down here, negative 6. And if we scroll all the way up here, at the highs, it was plus 17 million delta. That's the cumulative delta, CVD, cumulative volume delta, which is also just what you're seeing when you look at a CVD line. So when we see this is just showing from the low at negative 15 million delta here to here at positive 16 million. And this is in the session. And the session just reset, by the way. That's why it's back at 0. That resets at the New York Open. But anyways, in this session, we've seen 30 million positive delta accumulate on an increase in open interest. And that's what this line graph is showing. And it's just another way of viewing this information. And when you look at CVD divergences, like the bearish divergence we have here between this high and this high, it's just saying there's been a lot of longs opened relative to these highs, and they're getting absorbed, and we know that because if they weren't, price would have taken that high. So it's just a simplified version of looking for a divergence is a simplified version of doing order flow analysis. It's fairly consistent on these local time frames, but we can break down what's actually happening here with a little more nuance. So now we're seeing it's on a decrease in open interest, so it looks like some shorts are closing here at market, but I'd like to see lower. And just to go back to a trading view chart, which can be a little more clear. And I want to point something out. Like, people can get really frustrated. You know, they miss a move, they get stopped out, whatever it is. If you're applying reasonable, consistent ideas to the chart, you're going to find yourself in good positions. Just use risk management. A stop loss should not be a big deal. You're just looking to consistently win. You know, you can just make such a reasonable case for taking a short here. If you don't take it, that's fine. There's probably going to be a reasonable case for taking a long as a scalp at the lows of this range, just based off of what I imagine order flow is going to look like. And maybe it doesn't. Maybe we just nuke. But there's no reason to panic, to get frustrated. I'm actually curious. So I'm just going to have this fib on because a sweep of this low is just going to be a 618 retracement from our impulse low to high. Technical trigger would just be a sweep and a reclaim. But where things might get less likely that you're going to get a setup like this play out is if we just saw 20 million negative delta here. All get absorbed. And so, like, yeah, I'm just actually going to go show this example because it's kind of a good one on this front run. You know, taking this low as an idea, and we see this wick here, and there's just, you don't know there's going to be so much liquidity here until you actually see it. But here you just have all of a sudden a 66 million volume candle with 18.8 million negative delta, and there's just clearly a lot of liquidity. Even though we front run that low, price wicks up, holds as support. It's kind of a bullish idea from an order flow perspective, and we actually have seen that quite a few times with these higher lows. Just such random high delta little sell-offs here. 6.4 million a wick. So anyways, this is the kind of thing I'd be looking for. This big high volume, high delta flush, a nice reaction, and then I look to scalp along with tight invalidation, just like this 20 million negative delta. So that's the kind of thing. I appreciate, I'm noticing, I just noticed we have some LATF members answering some of the questions in the chat. I appreciate that some of the viewers have. Whoa, I went way back. I think there's a hotkey just to reset. Actually, it's in the bottom right corner, but I'm gonna get there manually. But hopefully these concepts make sense. Like, we can look at what's happening here and we can infer things, what becomes more probable and less probable as we view this local order flow. One more question. Where can I turn on total volume and delta for each candle? That's in your settings. And I think it's in candle settings. Or maybe it's in text. Click through these. Where is that? Where would that be? Info, maybe? Yeah, you want to go through these settings. I actually forget exactly where it is to put it at the top and bottom of the candles. And the CVD line is just here, delta bars. So you have your delta bars, and then you can go to CVD line. Again, that's going to be in your CVD settings. Show CVD line. Show CVD line overlay main chart. That's where I have this line down here. I don't know what happened. I should know, but the scale should be right over the price action. And I've been playing around with the settings and I can't get it to go back. It's all wonky. But you can also just turn it on in this window here and view the same thing. Someone's asking, what is my strategy? If I want to share it, it will be awesome. It depends on the setup. There's lots of different ways to trade certain ideas, and certain setups have completely different triggers and invalidation and targets. Something like this is very simple. It's just a range, shorting at the range highs, maybe longing at the range lows. You can set limit TPs here and just catch that wick. Or if you want, you can see, is there a reaction? If there's no reaction and price just runs down, you can just hold the short. But obviously, if you're not going to be there to actively manage that position, it's perfectly reasonable just to have limit TPs set. Well, hopefully we get some volatility here in the next 10-15 minutes. See if we can take these range lows. Yeah, I just noticed I hadn't posted on Twitter in like a week or something. So I decided to do a public live stream, and maybe I'll give some updates later today on Twitter. But yeah, here, you know, like a very common mistake for a brand new trader is they would just sit down, open up their charts, look at the chart and be like, I think we're going to go down. And probably not looking at anything, not looking at order flow, not looking at technical levels. They might just look at a blank chart and then they open a short position. They don't really have an invalidation, and they just, you know, the ultimate mistake would just to say, surely we must go down. At least I need to get out break even. They open a short here, price starts going up, they have no invalidation, and then they just get liquidated. Or the same thing for longs. So, you know, it's important to have just reasonable ideas, to be patient, to wait for clean, clear setups. Sometimes you wait for a setup. Like I can show this example. It was a little frustrating. I had this idea on my chart for a while on, I think from down here on ETH, sorry, on XRP, of coming up and taking this wick high. And I was actually on a members live stream the other day during the New York Open and prepared to short. I was sort of all hands on deck. I had my short position ready, waiting for this level to be run to take a short. And it's a high time frame idea. You know, it's something that's been on my chart for a while. And we front ran it by about 0.2%. I thought, I'm gonna be patient and wait for it. I wouldn't be surprised to see, you know, come and take some local liquidity and then run the high. Anyways, you know, in cases like that, you could say being patient doesn't pay off because you missed the trade, and then we have like a 10% plus rejection. But I don't have, you know, the setup is to come and take this pivot high into this level. So it didn't come, and I didn't get the trade. Nice little range forming here though on XRP. Some interesting high time frame ideas too. Not high time frame, mid time frame. But the idea would have been to short down into here. Even this could be an interesting continuation short. And maybe look for some longs down here. You kind of have to choose the chart you're gonna, or the pairing you're gonna chart on. I like this chart for order flow, and I like it for, so, you know, I don't necessarily, for example, like order flow is a really good example of this. I don't think it makes sense to evaluate order flow based on whatever exchange you're trading, for example. And this is a little bit complicated and maybe contested, but it's my belief that some exchanges don't have very clean data and it's not very reliable. Can't really necessarily, I mean, I'm not gonna do a big thing about it, but there's some exchanges where it literally is impossible what you're seeing. Like the order flow makes 0 sense. And so I like using Bybit's order flow. I think it's more reliable, and yes, it's not going to be representative of the entirety of the market, but let's just say on average people are trading the same way, and if you have clean data from one source, it should typically be representative of what's happening across exchanges. It's not like everyone who trades on Bybit trades completely different than everyone who trades on Binance, and they trade completely different than everyone who trades on, you know, BitGet, whatever. So generally people are trading the same, that's why technical ideas work. That's why liquidity ideas work. People put their stops in the same places. People take breakout longs in the same places. So if you have clean order flow data, which I believe this Bybit pairing is quite clean, it should generally be representative of what's happening across all exchanges. So I'm in this algo retracement short. Be interesting to see what happens here. I'm gonna move this alert here. Be interested to see as price comes back up into these local highs. Someone asked if I can look at Bitcoin dominance. I can do that. So, Bitcoin dominance was in this ascending structure. We got a nice reaction. So, this was a major technical idea because you have this ascending structure into the 382 from high to low, and it was also a retest of this level. And so, my perspective on Bitcoin dominance, and I did some Twitter updates at this point here, was maybe we get something like this and we retest these previous highs, which we did. Bullish would be if we can break out. It's still drawn on my chart here, and reclaim and hold this level as support. So this is bullish as of now. A deviation would be, well, if we do just break down and flip this back into resistance, you have a deviation. But there's no technical reason to be bearish on Bitcoin dominance here while we're holding this as support, and there's no structure here. So, a break of this, and I mean, if you had like a huge move on Bitcoin dominance in a bullish setting, because remember, Bitcoin dominance going up could also just mean Bitcoin is going down and alts are going down, alts are just going down more. But in the bullish case, you just run through here at the same time as Bitcoin itself breaks out, has very similar structure to the dominance chart in this sense. There's no structure here, and maybe we just run into this 50K level, which is our major GP, and certainly a short idea. I do have if I can find it here. Yeah, playing with some different Elliott wave ideas. Oh, this is on this idea is on a different chart. So this idea would look something like this on the let's go to the weekly chart here. This is a pretty, I'm not so sure about this. I'm just trying to think about, oh, I got to go to log scale here. All right, we can look at this really quick. I'm just playing around with this idea. So what that would look like in this case would be retracement back into a wave 4, and I'm just trying to see if there's any valid ideas from an Elliott wave perspective where we would have a move up to 50K, come back down and retest this ascending structure back around 17K, but probably not take this low. You could make an equal low here, but holding this ascending parallel structure and then rally to all-time highs without having that, like we have a big bearish rejection. This C target probably should come up around 50K if this idea is right, but it would basically be a WXY here, with this being a flat, and then you would be looking for some kind of zigzag back down. It doesn't break any rules, I don't think, although it does break some norms. Like, it probably isn't the most likely count based on not hard rules, but just things that are more or less likely. But anyways, so, you know, if Bitcoin dominance gets that big run up through that void on its chart, and we see Bitcoin continue this bullish move, I think 50K is a pretty reasonable target at this point. Taking this high, it'd be the middle of this channel. If it coincides with the middle of the channel, I think that'd be interesting. But that gets us there, you know, first week of December, last week of November, so next few weeks. And then coming back down into these lows around end of June. So that's a high time frame idea. And if this structure holds, you know, as crazy as it is, you could say, well, you could put in a wave 5, maybe looking around 200K plus there. So just a high time frame idea. Not gonna help me here in today's New York Open. All right. So we're getting another move to another red candle here. Like I said, I would like to see lower locally, just because it's not a very compelling amount of liquidity here locally. Hopefully we don't spend all of the New York Open ranging doing nothing. It'd be nice to show an example of what I would look at as a valid trade trigger live with order flow. So let's see if that happens. Of course, very possible we just run. The idea is we sweep all these local lows, we take out all the long stop losses that are accumulating here, maybe even trap some breakdown shorters, and then bounce and rally, and everybody piles back in and we get another push up to the highs. But if we don't bounce there, and there's no support, and support would by definition be limit orders sitting there, then there's no structure here, and we'd just be looking into these impulse lows. And just saying we can get a bounce here, I can get a trade trigger, we can rally a little bit and then come and wipe out those lows, in which case I'd take a stop loss. So here we see another 3 million delta coming in. 3 million negative delta. And these are shorts. We haven't been seeing a ton of shorts opening aggressively, but here we do. 3.1 million shorts. If you're this guy locally, you know, you just pump. I guess the delta here. Yeah. You never want to open a $3 million short here right on this local breakdown and then see price start bouncing. Somebody took the other side of that long. And what can happen here, this isn't necessarily some big signal that price is about to break out to 50K. But what can happen here is these people just keep getting chopped up. The longs open, they get stopped out. Maybe it's even the same trader that opened the $3 million long here, gets stopped out, gets bearish, opens a $3 million short. Price just runs the local highs. He stops out again. Maybe he flips back long and then gets stopped out again. And you can just have price chop around and wreck all these local traders here running tight stops. So it's always fascinating to watch order flow and see what's happening to these traders 5-minute candle to 5-minute candle. Because what's probably going to happen here now is this guy's going to get squeezed out. I mean, I'd be surprised just based on the reaction here if we don't even just run these local highs, which is probably... We may not, though. I mean, selling pressure just comes in and we just break down. But if you look at this on the TradingView chart, no, this looks quite bearish. So you have $3 million in shorts opening here. And maybe you get some kind of run up here, stopping them out. Could be a 0.2% move. This happens. And unsurprisingly, it's right at our local GP, and a little under it. I wouldn't say this is a particularly significant level. I'm not going to long this or anything. It's not a very significant technical level. There might be some confluences here, but sort of the payoff here of price maybe squeezing out a $3 million short is like, after fees and everything, like you're looking probably for price to come to here for this idea on an order flow perspective. It's not very compelling. It's also the value area low. It's also a channel. I'm just pointing this out because, you know, I kind of haphazardly said there's no confluence here as from a technical perspective. I'm still not longing it, but I mean, you could structure some ideas here that aren't crazy as scalps. I'm looking for this low to be swept. Setup could look something like this. Swept and reclaimed. I already have my order ready to go. But maybe we don't get this in the New York Open. We'll see. Trading sure is boring when you're doing it right, in my opinion. But oftentimes, you know, whether it's high time frame ideas or low time frame ideas, you don't have to sit and stare at the 1 minute chart and 5 minute order flow. You set alerts. Come back when you get triggers. All right, so we already know I have showing the technical idea here. But let's watch this potential idea from an order flow perspective. So we're looking to come and sweep these lows. Top of the green box is the low. I'm just going to see what order flow looks like. Another thing that's going to happen a lot of the times is, say the shorts that opened here, price runs these lows, and then you get a bounce, and there's still liquidity to the upside, because very often these shorts aren't going to be closing here. So when price bounces, they're still open, and they start closing on this move up. And I'm sure many of you have been there as well, where you open a short somewhere like here, and you start seeing that breakdown, and you start celebrating because you're looking for 10K. And then this happens, and you get stopped out. I'm not saying that will happen. I'm just saying that liquidity kind of preserves itself typically on these short moves. It's very unlikely this person's taking a short with this as his target, but it's possible. And so my plan here, again, always using risk management, and I don't believe anyone should be trading without trading their own setups that they understand, and without having collected their own data, paper trading, and then maybe trading with a small amount of live funds, an insignificant amount of money, building a personal track record, understanding your own style, your own strengths and weaknesses before going to a live trading account. So just saying, I might take a long here, but I'm perfectly accepting that price could just break down and stop me out. Yeah, Krish saying a lot of liquidity building up at 33K. Yeah, for anyone who's just tuning into the live stream, I already covered all these levels down here. This is a scalp idea. I'd almost rather not even get a trigger here. I'd rather just see price finally take all of these lows. But we'll see. I'm not going to take any chart requests right now. I saw your request for Doge. I'll do another live stream taking some chart requests, but kind of want to keep this a trading session live stream, and then we'll wrap it up soon here quickly, hopefully. Probably regardless of what happens, I'll wrap it up. And I'll give updates in the Discord. Typically, I'll give, like, if I have a setup like this I'm interested in, I'll just give an update as one, price is approaching the level, as the level's being tapped, pointing out the delta, the order flow. Typically just say something like, that was my long trigger, always using risk management and invalidation, scalping this back up into the highs of the range. But I don't really update those types of things on Twitter very often. That's just like really high time frame ideas. Because as you can imagine, like whether I'm giving updates in written format, like the algo example I showed, kind of talking a little bit about the nuance of the idea, talking about the order flow, or maybe it's an idea I've covered in a members video or live stream, and then giving those updates. It's kind of just, it's too much on Twitter, and you're just talking to people who have really no interest in knowing what you're talking about in this sort of, on these kind of scalping ideas. And it just won't make sense to anyone. And of course, we have a local range here. Price that's kind of like, you could say we swept these lows, held as support, holding as support. There's just no compelling order flow reason for me to long here. Technically, you could just call this a local range, and there's probably some justification for taking this long, but it's just not something I'm interested in. I'd like to see that higher volume, higher delta sweep if we get one, and if not, that's okay. It can be picky and choosy. Oh, it's on the wrong chart. I was just showing this. I mean, you could justify taking this long. Just like I said, not something I'd be interested in. Based on my local analysis here. Well, maybe, when is that, how long until Powell speaks? Maybe that will bring some volatility. We can tap some of these levels. I usually post the higher time frame stuff on Twitter to answer that question. By high time frame, I just mean high time frame structure. I mean, you could say it's subjective to an extent, but clearly this 5-minute chart, these aren't high time frame ideas. They didn't even exist 6 hours ago. There's no high time frame structure here. So I'm just talking about high time frame structure. So like, this is obviously a weekly chart, but all of these high time frame pivot lows, pivot highs, high time frame technical retracements and those sorts of things, channels, that's all high time frame structure. But this is not. This is a 5-minute chart. There's no high time frame structure here. Nice. I don't even know what the Powell, what's going on today. What the? Sorry, I'm just fixing my CVD line here. But I'm just kind of confused because I've toggled this on and off like 300 times. And now it is working. But I should be able to, used to be able to have the scale adjustable here. What's that setting on? All right, sorry. I was just doing something. Yeah, local CVD just still looking quite bearish. I see some more longs getting stopped out here, 1.4 million. All right, well, we might be able to end this live stream with something interesting happening. Price coming down into the lows of the range. Someone's saying, how do you confirm a reclaim? Well, a reclaim, I mean, we've all seen a really quick wick. A price runs the liquidity and just wicks back up almost instantly. That's a reclaim. Price can, people might say, well, you know, I want to see a 15-minute close above, or a 1 hour close above, or a 4 hour close above. I mean, you can have reclaims, retests. If price reclaims the level, it's reclaimed the level. Moves can happen very quickly. They can happen slowly. And if it loses the level, it's lost the level. So, you know, if I see that high volume wick like this, wait, what is going on here? All right, so we have 5 million negative delta here. We've tapped this low. I would probably run my stop a little wider than right under this low. And I'm looking to scalp that long. That's enough for me. I'll scalp it. I have my invalidation. And if we go to the, I wouldn't mind seeing price come a little bit lower into this, but if this happens, I'll be getting stopped out. I may re-enter if this happens, but my invalidation is underneath this golden pocket. Nothing crazy here. 5.4 million negative delta. Got a couple million right at the lows. Just longs being stopped out. Initial reaction. There's nothing really to say whether this is a likely trade to work or not here. I wouldn't be surprised to see, even if it does work, price run the lows a little deeper. And it wouldn't be unreasonable to wait for that. But I'm fine to have some position open here. I do just have primarily shorts running as well. So it's kind of nice to look for some scalp long ideas. Again, the idea here should be pretty simple. Like structurally, right? Let's just clean up the chart a little bit. I'm actually going to hide this because this is just that high time frame. You have this low, just got swept. Potential for a range to form here. A little bit of local strength coming in, nothing crazy. Doesn't really matter what happens here, frankly, because I'm not going to TP1 here. But always nice to see an initial reaction. I wouldn't be surprised to see something like that, even if this does work. But we'll see. And targeting back up into the highs of the range. I mean, it would be very aggressive. Like you could have, in theory, if you wanted to trade this as like an actual invalidation below the wick after the reclaim, could trade it super tight. But I don't know. I'm not going to trade this with a 0.1% stop loss. Although there is a case for, at a certain point, just bringing your stop loss up under this low and removing some of the risk. And maybe looking to re-enter, like you essentially take slightly less or more than break-even stop, and if there's a reclaim, you long it again. But there's no, I'll talk more about this in the future, but there's no, someone's asking how low could price go if we reject from 37K. I mean, it could go to 2K. There's nothing that will determine how low can price go or how high could it go. Anything is possible in theory, but some things are much less likely than others. So we'll see. We'll see if we just get like a technical reclaim of this level and we get some strength here. It'd be interesting to see. Not a lot of longs opening yet, which is in some sense a good thing. What we'd prefer to see is some shorts starting to squeeze out here and longs start opening higher. I'll cover some of that higher time frame stuff in the future. I mean, talking about how low price could go if we have a big rejection from 37K. There's going to be a lot of technical structures below us, and I'm probably going to, we'll see how price reacts here. If we can start breaking some of these local highs, get a little local change in market structure, I'll end the stream. If we come back down, and run these lows again, I presume there should be a lot more liquidity down here. 4.3, 2.9, 5.4. We've had a decrease of 10 million delta since the New York Open. So in theory, there's like another 10 million positions to stop out down here somewhere locally. Oh yeah, this tool is called oh yeah, I meant to say if we claim these local highs. But yeah, I'll probably wrap up the live stream pretty quick here. I think we've accomplished the mission, which is to just sort of cover the charts, We talked a little bit about how to structure trades. We covered some local order flow. Planned out a scalp long setup. But yeah, when you're, like when you end up with, like say if I end up on Twitter with a position and I'm like, oh, I longed the exact bottom of this wick. People think it's like impossible. It's insane. There's no way you long the bottom of that wick. That's impossible, And maybe it's something I've just updated on Discord or something, and I didn't share it on Twitter. But you can see here, it's not that crazy of a thing to have done. Like this, if this trade works, it's very straightforward. The structure is straightforward. The idea of the move down based on order flow is straightforward. There's nothing particularly crazy happening here. Obviously, you have to have an understanding of these things. And you have to be patient. And you have to have the constitution to put on the trade. But other than that, it either works or it doesn't. There's nothing crazy about looking to remove some of the risk from your trade. I mean, the ideal scenario, of course, is just to see like this local market structure break and we just run to the highs of the range. But I'm a little skeptical about this low holding, but certainly may. We have the technical idea. The volume here, it's not crazy. The delta's not crazy, but it's not insignificant. And we can just base that on what we've seen in this range. We can see the volume in all these 5-minute candles. We can see this at the high here, where we rejected, was a relatively high volume. Or no, this volume came in down here. But we can see just in the context of this range, this isn't an insignificant candle for a scalp. And we're getting a reaction. So far we're reclaiming this other low as well. But still locally bearish here in terms of market structure. But I'm going to stick around for a few more minutes and see if we run these lows again or break down. Someone's asking what would my take profit be on this scalp. I think it makes sense just to trade it back into the highs of the range. Now, something could happen here from an order flow perspective, where you're on the charts and you see 20 million positive delta here and a big bearish divergence. You have a technical retracement, and it can make sense to take profit sooner. But it's also not a bad idea if, like, say this is your profit target, to just front run it a little bit. This can be the difference between, like, typically you want your profit target to be right before the liquidity idea if you're setting a limit order. Like, for example, say that you're looking for this and maybe you want to flip short on a scalp short. You wouldn't want to put your TP like here. You're drastically decreasing the odds that your limit TP is going to get hit, when you could just bring it into this level to squeeze an extra 0.2% out of it, or half an R, or whatever it is. Yeah, I know I can delete my drawings with Control Z. But what if I'm busy doing something with my other hand? You think about that. Yeah, I don't know about. Someone's asking if I think we'll enter into a recession this year. I mean, I'm pretty bearish on the S&P, but I don't know. I mean, I just like looking at the charts, and you know, things change depending on how price interacts with different levels and what happens, but I guess from a chart perspective, I wouldn't be surprised to see us enter into a recession. All right. Well, I think I'm going to wrap up this live stream here. I mean, I think I think this was a winner. I mean, not this trade. I have no idea if this trade will be a winner, but I think the stream was a winner. I think there was we covered interesting things. Nice local read on order flow, and no point in just sitting here watching the 5-minute chart. I'd still be kind of interested to keep an eye on these lows to get run again. Like for example, we just maintain this kind of local downtrend and we don't break these highs, but all right, guys, thanks for coming by. Come join the Discord. Even if you just want to join the public Discord, which is free, it's the same Discord. You just, if you're a member, your role gets upgraded. Come hang out, share some charts. Maybe I'll stop by the chat there.